Hi, my name is Kent Bachman. I've been an insurance professional for 20 years, focused on life, disability, Medicare, and retirement rollovers. Recently on Facebook, I solicited questions from my followers as to, hey, what are some questions that you have about insurance that you don't have an answer to? One of the questions that came up is one that's come up over my entire career, and that is, Kent, what's the best kind of policy? Or what's the policy that's for everybody, or the policy that I need? And my question to that is always going to be, well, what do you want it for? What's the purpose? What's the problem you're trying to solve? And that should always be the next thing out of your financial professional's mouth, not this kind of policy or that kind of policy. The question is why? Well, policies are built for different reasons and for different scenarios. Specifically, this gentleman was asking, because he's retiring, what kind of policy should I have for later in life? I always thought I'd have this insurance that I have at work. I never thought about the day I'd retire, and I guess I thought they'd let me take it with me, which they don't. So my question to him was, well, what do you want it for? His response was, well, someday I'm going to die, Kent. We all do. I don't want my wife or my kids to have to try and come up with money to bury me and to cover those costs. Well, my response was, well, we should probably look at what's called the final expense policy. But before I get into that, I want to address some misconceptions about insurance later in life. And misconception number one is, Kent, I'm just so unhealthy. I can't get insurance, I'm sure. Well, let's define what's unhealthy. Every insurance company is going to define that differently. Some companies are better for folks with diabetes. Some insurance companies are better for folks who've maybe had a heart issue. Some companies are developing products specifically for an older subset of people that are actually really, really healthy. So the idea that you can't get insurance because you might have some health conditions, throw that out the window. There are products specifically for you. Well, Kent, I'm older, so it's going to break the bank. I can't get anything that's going to be affordable. Again, I'm here to tell you that that's not the case. The way the companies have built these products these days, they built them with the consumer in mind. If they intentionally priced them so high that people couldn't get them, well, they wouldn't stay in business. So there are affordable products for people out there, even if they have some health conditions. Misconception number two. Well, my dad said, don't get this type of insurance. My uncle said, never get that type of insurance. Well, usually when I've run across folks that have said, never get this kind of insurance or that kind of insurance, it's typically somebody told them that. But if you dig a little bit deeper, typically what you're going to find is, well, why did your dad say that? Well, I don't know. He just said, don't ever get that kind of insurance. A lot of times it's these misconceptions that are ingrained from people that we know and we love, and we trust those folks, and there's nothing wrong with trusting those folks. But again, maybe they had a bad experience. Maybe something wasn't explained to them. Maybe what they thought they had really wasn't what they had. I've run across that over the past 20 years as well. And that's why I think it's important always to do policy reviews with your agent. One of the common ones is, I don't like whole life or I don't like term insurance. Well, it really depends on the situation that you're trying to insure against. If perhaps you're a younger person with a family and you're trying to cover mortgages, car loans, children's education, replacing income, well, it's probably likely that a term insurance would be your better bet because you're going to be able to get more insurance for less dollars and thereby provide the most bang for the buck or really the most for your family. But if it comes to end of life, does it make sense to get a policy that only covers for a certain amount of years? No, it doesn't. And I want to tell you Steve's story to illustrate that point. Steve was a client of mine, one of my oldest clients. He was a client that I had done business with years and years ago when I was primarily Medicare focused. He was getting older, and he came to me one day and he says, "Well, Kent, I know you. We've done business with you for a long time. You've helped us out on several things. I need to get some life insurance." I said, "Okay, Steve, what do you want to do? What's the purpose?" And it was just that. I want to provide a little bit for my wife, and I want to make sure that she has the money to cover those end of life expenses, funeral costs, things like that. I said, okay, well, here's what we should probably look at. We should probably look at a final expense policy. Now, what is a final expense policy? A final expense policy is simply a small whole life policy. It's permanent. It's very simple, just some health questions. You don't have to get stuck with a needle and give blood. You don't have to pee in a cup. They're not going to put you through the rigmarole. At most, you might have to do a phone interview along with your application. Applications are very simple, typically some health questions, and they'll check your medication records. Medications are usually a pretty good indicator of what your health is. So very simple, very easy. But when I said whole life, Steve's comment was, "Oh, I don't like whole life. I want a term policy." Now, keep in mind, Steve was in his late 60s. He wasn't terribly unhealthy, but he wasn't healthy. And that's a misconception that I think a lot of doctors give to people. Oh, you're doing good. Well, you might not be doing good. You're just doing better than you could be. My mom had a doctor like that for years and years and years. My mom, unfortunately, smoked for a lot of years. She was diabetic. She was overweight. But her doctor would say, "Hey, you're doing good." Well, my mom was maintaining. She wasn't doing good. And that's typically a lot of the clients that I'm working with on policies like this. So back to Steve. Steve said, "I don't like whole life. My dad said never get a whole life policy." And typical line of questioning, "Why did your dad say that, Steve?" "Well, I'm not sure, but I just know that that's not good and I don't want it." Well, at the end of the day, you got to give a client what they want. Now, Steve did have some health conditions, and unfortunately, when we applied for a term policy for him, he did get declined. Fortunately, I was able to find another company that would take him, and we got him covered. But the problem I warned Steve about, the fact that, well, this policy is only going to go for a certain amount of years, Steve, and you're looking for it to cover end of life expenses, you might be gambling there. Well, it turns out he lived another 10 years, which was great. I'm sure his family was very happy about that. But here we were again. We didn't have insurance. We needed insurance for end of life. What complicated this was two factors. Number one, Steve was older. And number two, his health hadn't gotten any better, as oftentimes it doesn't later in life. And so we were back in the same boat. And Steve made a comment that he said, Ken, I wish I would have listened to you 10 years ago. I could have gotten this same thing, but it would have been a lot cheaper back then because I would have been a lot younger and I could have actually got more coverage for my family. So that's kind of the difference between term and whole life. If you're trying to cover just basic final expenses, end of life expenses, I mean, it's right in there in the title, final expense insurance. It's going to be the final expenses that your family is going to have with regards to you. It's going to be there to cover cremation or traditional burial or estate settlement costs. Okay. The thing about it is, you want something that's actually going to be there. And the problem with the term insurance in that instance is there's a good likelihood it won't be there. Final expense is permanent. It's always there as long as you pay your premiums. And it does exactly what it's supposed to. So those are some misconceptions there. My family experience behind this. My dad died shortly before I started in the insurance business. When dad died, I did have my license. I was not actively working yet, but I was there to help file some claims for my mom because I did know that much, even though I didn't know much else. Now, my dad had a small policy. It was about $25,000, which covered dad's funeral costs, his medical deductibles, his plot, his headstone, and those things. Now, in 2005/2006, when my dad died, costs were a lot lower than they are now. My dad's plot, headstone, medical deductibles, and funeral, all of that together was $15,000. Now, back then, of course, we said, "Oh my gosh, why does this stuff have to cost so much?" You fast forward 16 years later when my mom passed away. Now, my mom died from an accident, so there was no medical cost. The plot was already bought. The headstone was already bought from when dad passed. In 2022, when my mom passed away, her funeral alone cost $16,000. Okay, so costs have gone up quite a bit. And it's not like my family is from some rich area and we were burying mom in a gold-plated casket. I'm from rural Iowa. We know our funeral directors. They're good people. They're not trying to put one over on us. So costs have gone up. But I want to illustrate the fact that after my dad passed away, there was about $10,000 left over. What my mom wanted to do was take that money and go prepay a funeral. Now, by this point, I had been in the insurance business for about 6 to 9 months. I had kind of heard clients talk about these things, and I'd heard some horror stories. People in bigger areas, not in my rural area where we knew everybody and everybody knew us, and things just always kind of worked out. Bigger areas where funeral homes went out of business, people lost their money. Funeral homes sold out. New owners didn't honor those previous contracts. I'm not saying that's a thing that happens a lot, but it can happen. And I'd heard these things. And so when my mom said, "Hey, I want to take that money and go prepay my funeral," I said, "Now, wait a minute, Mom. Why do you want to do that?" She says, "Well, I want to make sure you boys don't have to deal with it." Well, appreciate that, Mom. But let me tell you some of the things that could happen. We know such and such. He buried dad, he buried aunts and uncles. I went to school with his daughters. He's a good guy. But what happens if for some reason he went out of business? Your money's gone. What happens if he sells out and somebody doesn't honor the contract that you've put together because it wasn't made with them? You're out that money. I said, "Mom, wouldn't it be a better idea to take a little bit of money every month and put it into a final expense policy so that if something does happen, for the most part, the insurance company is probably going to take the hit on that. You take your money, you put it in the bank, let it earn interest for you. You use it for your living expenses, and you're guaranteed that." And the other thing about that final expense policy, Mom, it's not going to be subject to probate. In other words, when you pass away, that money is going to go to me and the boys. So we have it there to take care of your final expenses. Mom kind of looked at me and said, "Yeah, yeah, I think that's a good idea." And I put the caveat on it even then, "Mom, I'm your son. If you don't want to do it through me, I can recommend you to somebody else." "No, no, no, no. You're my son. I'll do it with you." You fast forward to 2022, and my mom passed away. She fell down the basement steps, unfortunately. She had an accident, and there was money there almost immediately with that policy to help cover her funeral. Now, the policy we had, it was a smaller one. It didn't cover all the costs, but it covered most of the costs. And when you're in a situation like that, something is always better than nothing. In fact, it covered nearly 2/3 of the cost of her funeral. And so that for us was a blessing. Now, that said, I want to address some other misconceptions about final expense insurance. Kent, I saw one on TV, and we've seen them. They're advertised all the time, and they say things like guaranteed acceptance, no health questions asked. I've had people ask me that question. "Kent, why are you asking me health questions? The one on TV said no health questions." Well, my common question back to that person then is always, what's the catch? Now, I'm here to tell you that those policies, there's nothing wrong with them, but they're designed for a specific subset of people. Those are what are called guaranteed issue policies. Guaranteed issue because if you pay your premium and you submit your application, that insurance company is going to insure you. Guaranteed. No health questions asked. But what's the catch? The catch is, and not all of them are the same, but typically, if you die from a natural cause, natural causes are things like cancer, heart attack, stroke, just those normal things in life, old age, not an accidental death like my mom, but a natural cause. Those policies will not pay out that death benefit that's stated on the front of the policy for the first 2 years. What they will do typically is pay back all the premiums paid in plus a percentage of interest, typically about 10% to your heirs. So, give you a quick example. Let's say you paid in $500 and you die from a heart attack, and it has a 10% interest return on it. What that means is your family is going to get back the $500 that you paid in plus 10%. So they'll get back $550. Now, I'm not here to run a policy down like that. Why? Because I've used them myself. But the question is, who do I use them for? Who I use a policy that's guaranteed issue for is somebody with some tremendously bad health issues going on. Okay. Somebody that I can't get covered with a day one benefit someplace else. Now, fortunately for me, unfortunately for them, those folks usually understand the situation. They've got some major health issues that are a problem. And so they understand that it's going to be hard to get them covered. But the thing that I have always told those folks, and they usually agree with me, is, well, it's better than having your money in a bank. Find me a bank in this day and age that's going to pay you 10% on your money. So for those folks, it makes sense. But if you've got just some basic health issues, type 2 diabetes, even type 1 diabetes, depending on the situation. If you've got some other things, if you've maybe had a heart attack in your past or cancer in your past, most of these insurance companies that do final expense policies have certain amounts of time that they look back and they count those things against you. But if you're outside of those time frames, they don't count it against you. Every company is going to be a little bit different on what their look back is on certain conditions. And so again, we want to go back to one of those misconceptions. I'm unhealthy. I had a heart attack. I had cancer. I can't get coverage. That's not the case. We can always get you some coverage. It just depends on what's the best fit. The ones on TV, well, they're going to get a person covered if they're very, very, very unhealthy. One caveat to that is typically the rates necessarily aren't always the best on those ones on TV. There are guaranteed issue carriers out there that are more competitive. So, with that said, I hope that answers some questions about end of life, what might be the best kind of policy for you. What's the deal with those ones on TV that Alex Trebek and everybody else are advertising? You know, if you have any questions, please feel free to contact me back either via DM in the comments. If you found this video helpful, please like and share it. Other family members, other friends that might need the information. We appreciate you watching today and have a great day.